I'm going to start by saying that I love business. I would go as far as to say that I'm obsessed by business. And the reason being is because it aids us in so many ways. It lets us connect with people. It gives us a way of expressing ourselves. It lets us go on quests. It gives us satisfaction. And if set up in the right way, it gives us the flexible lifestyle that we want. And hopefully helps us realise our goals and dreams. I believe for a business to be successful, one of the most important things is that it has a financial system in place. And I talk a lot about knowing your numbers, and to be able to do that, you need a good bookkeeping system in place. They are the financial foundations of your business. And once you've got the financial foundations set up, then you can do things like run reports to look at profitability and track your tax and just get meaningful information from those reports. I had a client come to me recently. They were doing the bookkeeping themselves, and they had got in a bit of a pickle, and they had a coach that they're working with, and the coach was asking them for financial reports. Now, they weren't able to provide those financial reports because the bookkeeping wasn't in place, the financial systems weren't there, so the reports would have been meaningless. Now, I think that bookkeeping is underrated. People think that it's easy, but it's actually a skill. Okay, so I've worked with business owners for many years now, and being a business owner myself, I realise the importance of paying as little tax as possible. Now, but in the right way. So today we're going to be talking about business expenses and hopefully arming you with some lesser known business expenses so you can go away and hopefully reduce your own tax bill. Now, I have written a guide for my clients, so this information is all in one place, and today's talk is based on that guide. Now, does anybody know what the current rate of corporation tax is in the UK? Anybody? I mean, it could all change now. We've got a new government in place, so who knows what's going to happen. But it's increased recently to 25% on profits over £250,000. It stayed the same at 19% for profits less than £50,000, and the bit in between, £50,000 to £250,000, for that proportion it's charged at 26.5%. Now, that can result in quite a substantial amount of money. So it's important for us to focus on reducing that as much as possible, and that's what we're going to do today. That's what we're going to talk about today. So let's get started. So business entertainment, is it a tax-deductible business expense? Well, it depends. So if you are entertaining your employees, it can be a business expense. The HMRC guidelines or rules is that you're allowed to spend £150 per person per year, but you have to invite all employees to the event. Unfortunately, clients and subcontractors are not tax-deductible business expenses. You can pay for them through your business. However, we would class that as 0%. Another thing to think about, because obviously £150 isn't a huge amount to spend on entertaining a year, if you wanted to do other things with your employees, you can consider team building activities, and they can be allowable business expenses as long as they're not incidental to an entertainment event. HMRC's wording, clear as mud as always. So did you know your company can buy you a present? Yeah, it can buy you a present. So it's called a trivial benefit. You can also buy your employees gifts from your company as long as you are within these 4 rules set by HMRC. So as long as the gift doesn't cost any more than £50, as long as it's not cash, as long as it's not a reward for performance and it's not part of the contract. Now, we've got a client, and one of my client managers, Nick, he said to me, this client, I phoned them the other day because they'd drawn £50 out in cash out of their bank account. This was only about a week ago, and Nick was able to say to them, because my staff are all aware of this guide and they're all aware of these different expenses, he was able to say to the client, well, don't take it out in cash in future. He asked what the £50 was for, and the client said, we're starting this new kind of recognition programme for people going above and beyond, so every month he was going to give out £50. And Nick said to the client, well, if you do that via a gift card rather than in cash, then that becomes a tax-deductible business expense. The cash isn't a tax-deductible business expense. So the client was very happy, and from next month onwards, he's going to be buying a gift card and using the trivial benefit rule. So there's a similar rule for directors of closed companies. Now, a closed company is 5 directors or less. And the rule for directors is that it's just capped. So as long as you hit those 4 points and within those rules, it's capped at £300 for the year. So 6 lots of £50. You can buy yourself a gift card or a present from your company as a director, and it can buy you a present. So it's quite a nice one to know, a little treat for yourself from your company, reward for all your hard work. So does anybody know, is life insurance tax deductible? What do you reckon?
Yeah, it is.
So in general, life insurance isn't a tax deductible business expense. However, there are a couple of different types of life insurance that are tax deductible business expense. They're called relevant life cover and key persons insurance. So it's worth looking into those types, because if you can get the relevant life cover to do what you need it to do, then it can replace your own life cover that you're paying for out of your net salary after you've paid tax and not getting any benefits from. Then it's a no-brainer that you could put this through your company instead. So I get asked this question frequently: can I pay for my lunch through my limited company? Now, what HMRC are looking for when we're thinking about lunch being a tax-deductible benefit is whether the employee or the director is actually working away from their normal place of work. So HMRC assumes that the normal place of work will have a kitchen facilities where you can make yourself tea and coffee, make your lunch, and that kind of thing. And if you're away from your normal place of work, then they say, well, you're not able to do that. So lunch then becomes a tax-deductible business expense, and so as long as it is reasonable. So some of our clients do use their personal vehicles for business purposes. They may have a van for work, but then later in the day, evening, go and see a client in their own vehicle to do a quote or whatever. And what we recommend they do, what we ask them to do, is actually do a mileage claim to their business, because they can't just claim a fuel receipt because the company doesn't own that vehicle that they're using. They're using their personal vehicle. So it's 45p a mile for the first 10,000 miles and 25p thereafter, and that covers things like the fuel and the wear and tear of the vehicle. And the business owner can reimburse themselves that claim. So work clothing. Now, there is a famous legal case where a barrister tried to put through her business suits as a tax-deductible expense. Now, this was rejected by HMRC because HMRC deemed it as dual purpose now, because she could wear it for work and she could wear it personally in her personal life. So that has kind of set the standard for clothing not to be an allowable expense. However, there's a couple of different types of categories that we can get clothing through as a business expense. One is protective clothing. So if your clothing, for instance, things like steel toe cap boots and overalls and waterproofs and all those different kind of things, we can put them through as a business expense under the protective clothing banner. And the other one is uniforms. So if your clothing has got the company branding logo on it and it's clearly visible, then we can put that through as advertising for your business. And with the clothing that is a tax-deductible business expense, you can also claim the repairs and upkeep costs of those items. Now, can I pay my salary to my spouse? So if you have a spouse that is not earning any money and they're not using their personal allowance, £12,570 a year, as a couple, you are missing out on utilising that tax-free allowance. So what you can do, if you can feasibly create a position in your business for your spouse and give them some work to do, then you could pay them at least the $12,570 and make use of that allowance. So working from home expenses, there's a couple of different ways of doing this. HMRC has like a standard rate that you can claim for working at home. That's £312 for the year. Now, this can be claimed with no evidence, no questions asked, that can just be claimed. However, if you wanted to claim for extra things, so the additional costs we'll talk about on the next slide, but if you use a room at home, so if you've got a spare bedroom or you've got a garden office or something like that, it might be tax efficient for you to set up a rental agreement and actually rent that office to your company. Now, I would advise you to speak to your accountant about that, because you'll need to look at the figures to see if it is tax efficient for you. And just because it's not tax efficient one year doesn't mean it won't be tax efficient the next year. So just keep looking, keep an eye on that one. A lot of our clients charge tools at home now. So they want to obviously be able to claim that extra cost of electric through their business. And so we suggest installing a smart meter, because HMRC will require evidence of what the additional cost would be. And with a smart meter, it's a really good way of being able to provide that evidence. Just a quick one on mobile phones. So just make sure that the mobile phone bill is in the company name, because if it's in the company name, then it's a fully 100% tax-deductible business expense. If it's in your personal name and you're claiming it through the business, then there needs to be a personal business element, so it just makes it much more clean-cut. If you've got a limited company, just pop your mobile phone contract in your company name. Now, in my accountancy practice, what we do with our clients that we do year-end for, the year-end corporation tax return and company's house accounts, is we invite our clients to a prior to year-end meeting. And the purpose of this is to plan for year-end. So we'll have 9 or 10 months of actual figures, and we'll extrapolate that out to create kind of 12 months, a couple of months of estimated, to give us a good idea on how the year is going to end. So we can predict the profitability and calculate the tax, and then we can start planning and doing things like, well, making sure that there's enough profit after tax to cover the dividends that's going to be taken that year. Look at how much tax there could be that's payable, and think about, do you need any equipment or a van or something like that? Now, the beauty of purchasing an asset is that it will reduce your tax, but it won't reduce your profit, because it's a balance sheet item. It won't reduce your profit that you may need to be available to cover your dividends. The opposite to that is if you're not paying any tax that year and you're thinking, oh, should I not buy this piece of equipment that I want? We may recommend that you don't, because actually you're not going to benefit from it this year. And then the next year you could purchase it, and hopefully in the following year you will be making a profit and therefore paying tax. So the reason for doing this is preparation and having those strategic conversations. And if we had those meetings after the year had finished and we're reporting what had happened to you and what tax is payable, there's nothing you can do about it at that point. That it is what it is. So we find these prior to year-end meetings much more beneficial to plan for the year-end. I mentioned before that we've written a guide, a business expenses guide, for my clients. So we've got it all in one place. Now, if anyone would like a copy of that guide, scan the QR code and it will be winging its way to your inbox. And while you're doing that, does anyone have any questions?
Action. Yes. So Kim, you say that a director can take 6 £50 vouchers a year as a benefit. Can you take that as one £300 voucher? So it has to be denominations of £50,
yes. Yeah, ensure that you do that to make sure it qualifies. Yeah, yes, Toby?
With the £50 vouchers that you provide your staff, is there anything wrong with buying those £50 vouchers with petty cash?
No. It doesn't matter how you buy it.
Yeah.
You can buy it however you want.
Yeah.
And there's no cap on it for employees.
Okay.
There's just a cap for directors.
Thank you.
Anyone else? Thank you very much for having me.